Hey everyone, Couch Investor back to another video for you today and back with another Robinhood one. So the first one explained why I bought Robinhood for a short term, not to build up a full position, but for a short term trade because I did think that the company is doing much better than what the stock is reflecting. Now that we'd had another earnings report and the stock is basically down 20% after that report, I was like, makes no sense. So I increased my short term position in Robinhood. I'll explain throughout this video why. But for those of you that don't know the state of Robinhood itself, so here it is. Market cap $9.77 billion. Yes, year-to-date returns are close to 30%. If you look at EPS for fiscal year 2024, analysts are expecting it to grow around 20%, and then for fiscal year 2025, 13.8%. If you look at sales, they are looking for close to 40% growth fiscal year 2023, 12% 24, and then just 3% 2025. I do think this is extremely conservative and low. Now, these were the main highlights from the latest report. So net cumulative funded accounts reached 23.2 million. When you look at monthly active users, it is down 1 million quarter over quarter. We're going to talk about that a bit later. Assets under custody increased $89 billion, up 13% quarter over quarter. There's also a reason for that. Well, equities are going up, and so this number goes up as well. Now, this is pretty important. Net deposits reached $4.1 billion, 21% annualized growth rates. Total net revenue increased 10% quarter over quarter to $486 million. Adjusted EBITDA of $151 million. That's up 31% quarter over quarter. GAAP net income, you heard that right, for the first time, GAAP net income, $25 million. That's up $536 million quarter over quarter. Then earnings per share of 3 cents or 60 cents quarter over quarter. Now, of course, when you look at this, you're saying, okay, this company is now focusing a lot on profitability, and that's why growth is slowing down. That's why we're seeing the analyst projections for EPS higher than for sales. And yes, there's also a reason for that. The overall macro situation right now, high interest rates, low transactions revenue, etc., etc. Correct. We've seen this with the likes of Fiverr as well. Focus on profitability, and then when the market turns, focus back on growth because you'll have that luxury to do so. Now let's take a step back. How did Robinhood make the majority of their money before? Through transactions, right? Whether it's crypto or whether it's buying stocks. But since then, it has added many more products, programs, etc., etc. And so when there is a down cycle in the stock market, they'll be able to make money through other ways. As you will see in just a second, they're making the majority of their money right now through interest income. But when there is a bull market in crypto or in equities, when interest rates are coming down, transactions revenue should be going up as well, and they'll make their money through that. And here's basically the roadmap, the things that are already available on Robinhood. So deeper relationships, retirement, yes, gold, which is a subscription offering. Yes, then they're still working on advisory. We're going to talk about all of that in just a second. Things that were mentioned during the earnings call. They acquired the company X1, so they'll be offering credit cards, point systems, etc., etc. Active traders, stock screeners, 24-hour market. So they're one of the only ones in the United States offering 24/5 trading, and that's definitely going to help with more volume. Futures is still something they're working on, and then Robinhood Connect, Robinhood Wallet, and the UK expansion. And by the way, touching back on the crypto aspect, according to a Mizuho analyst, Dan Dolev, pretty popular in the fintech space, he says that Coinbase is losing crypto market share to Robinhood. He argues that the data from April indicates that the firm may be losing market share in retail crypto transaction volume to Robinhood, the trading app that became prominent for its appeal to at-home stock traders. So you might also say that when there is a crypto bull market that will start, Robinhood will see even more volumes than before. Of course, there is no FTX anymore as well. Now, let's talk a bit about what was mentioned during the earnings call, and then we'll come back to the investors' presentation. First up, with the 24 hours market, we are the first US retail brokerage to offer 24/5 trading of single name stocks. We finished the rollout to 100% of our customers in July, and we love the early uptake we see. We've seen strong volumes in our extended hours offering, particularly during earnings season, and Robinhood 24-hour markets makes it even easier for customers to trade whenever they want. We're excited to continue to expand the selection of names we offer, and we'll be adding 9 more tickets quite soon, bringing our total to 52. Again, this is good for traders, for long-term investors. You don't really want to spend that much time investing and trading around names. Then when looking at ARPU, so average revenue per user, we're going to talk first about what was mentioned during the earnings call and then look at the monthly active users. So they track their progress here by looking at net deposits and ARPU. In Q2, net deposits grew at 21% annualized growth rate and ARPU increased to $84, the highest level in the past 2 years. We're also making great progress growing assets per customer. Over the past years, assets under custody per customer increased 37% on average and 88% for gold customers. One focus has been helping customers to save and invest their long-term money. As a reminder, in January they launched Robinhood Retirement, the first IRA with a 1% match, no employer necessary, and it's great to see that IRA assets are now close to $1 billion. We believe retirement can grow into a much larger part of the business, especially as we add additional products like advisory. And this again goes back to the point I made before. These are products, these are offerings that will help them throughout a down cycle. When transaction revenue goes down, these are the types of offerings that will help the business grow in profitability, but grow in volume as well, because you don't really have to be so active if you have a retirement account, if you use advisory services, etc., etc. Now, going back to this slide, so monthly active users decreased by approximately 1 million to 8.8 million in Q2. So I here thought that Q4 2022 would have been the bottom after that rebound in Q1, but I was wrong there, so we keep going down. Let's see if this one is a real bottom. And if it isn't, at least we've seen a full reversal here when it comes to assets under custody. Of course, it is higher due to equity evaluations, but when you look at equities, that has rebounded quite nicely, and options is helping here a lot as well. And here again, you can see that while monthly active users are down, you can also see maybe a reason as to why that is. If you look at net cash held by users, that has almost doubled from Q4 2022. So more and more people have more cash on their accounts. Maybe they're just waiting for better opportunities. Maybe they aren't being so active, definitely not on a monthly basis. And so that's why we're seeing these types of number. Of course, for the long-term health of the company, you don't want to see monthly active users go down forever. Now a bit more color on the funded accounts here and the retirement as well. So we now have over 325,000 funded retirement accounts, up 75,000 from last quarter, and gold subscribers increased for the third quarter in a row to over 1.2 million, up about 60,000 sequentially and 150,000 since we launched the gold high yield offering. And so we have to go back to this slide right here, total net revenue, and then you can see here the different segments. You can see transaction-based revenue is down quarter over quarter. It's down year over year as well. But what has increased quite a lot is this green right here, so net interest revenue. Of course, with high interest rates right now, they're definitely taking advantage out of this situation. Of course, you might say, yeah, but this is not going to hold on forever and ever. I agree. But when things change, then usually what happens, transaction-based revenue will increase, and then all the other offerings are still growing as well. So while I do agree that the business currently is benefiting a lot from the high interest rate market, it is also a headwind that might turn into a tailwind later on, and we'll see the transaction-based revenue go back to its previous highs. Whenever that will happen, I don't know. But of course, right now, net interest revenue is great for the top and bottom line as well. And this is why we see this. So GAAP profitability, $25 million for this quarter, 3 cents EPS. And then if you look at the adjusted EBITDA and the margins there, we have increased by 5 percentage points quarter over quarter. Adjusted EBITDA in the last 12 months, close to $400 million. Very, very impressive. And the trend here is pretty nice to see, up and on the way to the right. And last two things here, strong balance sheet. So they have over $6 billion in corporate cash and investments. That's quite nice, especially if you know that the market cap of this company is just under $10 billion, just under $10 billion market cap. Cash here just over 6 billion. I mean, in my opinion, valuation wise, this is getting very ridiculous. Now, looking at the graph, of course, we had that huge run up pre-earnings. Earnings happened and the stock dropped close to 20% or so. Right now, it is hovering around $10.2 and $10.6 or so, which was previously a resistance. Right now, let's see if this can hold up as a support line. When you look in the last year or so, let's call it, you can see that we're having higher lows. So one here, June 2022, then January 2023, and the last one here, May 2023. Let's see what happens this time. But overall, RSI pretty neutral, MACD still bullish. I think there is, again, more reward than there is risk at picking these shares at these prices right now. Whenever the market will notice that this is fairly undervalued, I don't know. There's still a lot of talks with regards to rate cuts, rate hikes, etc., etc. But overall, sometimes you have to look at a company and you say, the market just doesn't make any sense. Let's pick it up for the long or short term. Depends on how you look at it. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Let's see you all in the next one. Bye bye.